Hello, welcome back. This is day 19 of trading until a Bugatti, and today is not a usual video. Today we'll talk about my strategy like I did on day 6 and day 11. I strongly recommend to watch previous video for the context if you're new here, and I hope you will enjoy. Today's video will go like this. I will talk about my strategy, then about my future plans and what I plan to do on summer break, and then we'll end it with the numbers of yesterday. So, the broadest definition of my strategy I can give is scalping based on price action. If we try to define it further, the core is price action, not deviation from an indicator or complementary indicators or ICT concepts. It's resolved around a couple of beliefs. What happens before is a strong signal for what will happen in the future, meaning if we avoid extreme chop, a good signal for future price movement is the previous candle, especially in strong trends, which you can see here on the picture. Now that we've defined that, which technical analysis aspects I use? The only thing I use is very simple. It's support and resistance. Support and resistance is simply a summary of so many hypotheses. If we look at how I use it, it's more like a suggestion to me. There have to be multiple factors because support and resistance often acts like a zone rather than a level. And even though I draw it like a level, I still use it as a zone. And my trades are not purely based on support and resistance, rather multiple factors that go into it. Support and resistance is one of the confirmation bias and one of the conditions the strategy has to meet for me to take a trade. Meaning, I will not press the short button as soon as the price hits the resistance level, and will not press the long button as soon as it hits support level, right? I might wait for confirmation of a breakout or a pullback or reversal or anything else based on other factors. Support and resistance is a key factor in my strategy, but isn't the most important one. Instead, I look at market condition and price action condition. I personally don't have a line between the two, so they are overlapping sometimes, but generally I must try and analyze whether the market is consolidating or trending. Is it ranging or chop? What is the overall trend, and what do candles tell us? Of course, there are more things, but I will show them in an example later. Then I try to identify support and resistance level and where they are. I put many of them to generally understand where we can expect the change in price action. I put some on 20 seconds charts, I put some at 5-minute charts and on 1-minute charts. So let's look at an example. If you hate the drawing, you don't have any taste, bro. I'm sorry. So we see here a market makes a big move. Then it reverses and goes up, and then it reverses again and starts going down again, right? After that, we see it reverse off of the previous support level that I will call it now. The blue circles are there to show that the first couple of waves I will just wait for the market to confirm that it's consolidating. The purple circles mean that the market is not exactly always consolidating within or at the range exactly, but sometimes it reverses before it hits the resistance or the support. And the red circles show liquidity sweeps in this example, which means that sometimes the market goes beyond the support and resistance level, right? But what we will focus on here is the green circles. So let's imagine the price just bounced off of that resistance level within the first green circle, right? That is our resistance, that is the 1-minute chart. It quickly reached the price and then bounced off. What am I looking here for? What am I looking here at, right? I'm looking here at 3 time frames, at 1 minute, 5 minute, and 20-second time frames, right? We see here the resistance level. Imagine these are all, just different time frames of the same price action, right? The price approaches the resistance level really fast. We can tell that by 1 minute and 5-minute time frames, and that's good. The faster the price approaches the resistance level, the higher the chance of it rejecting based on it, right? Then I will look at a 20-second time frame. I will keep looking at it. I will have them, 1 minute and 5 minute on the side, but I will focus now more on the 20-second time frame. And there we can see that the price is ranging. Those wicks on the 1 minute and on the 5 minute are full candles on the 20-second time frame. And we can see that it's ranging within the resistance level, so to say, right? It's ranging there, and I would be looking for it to exit the resistance range on a rising volume. That is generally the market condition, right? Once it exits the range on a rising sell volume in this case, then I would enter a short, put my stop loss at the top of the range, and put my take profit just above the support level. And that's it. So yeah, this is a perfect example how it's supposed to go, right? This is a 20-second time frame. Again, the price is going up. It hits the resistance level, the R level there. Then it ranges within there. Then it breaks out of a range. That's where I entry. I put my stop loss at the top of the range, and then I put my take profit right above the support level. And that's it. That's how the trade is basically supposed to go. This is all the logic behind it. So to summarize it up, the main things I look for is the resistance levels. Then I want to see rising buy or sell volume depending what we are getting rejected off of. Then what I also see is small range on a 20-second candle in forms of wicks on a 5-minute and the 1-minute candles. Then I want to, for 20-second candle, to break out of that range, and that's where I would enter the trade, right? I would keep my stop loss at the top of the range and my take profit at the right above this the support line. Yeah, but what if the market isn't consolidating? If the market is trending, I would look for small deviations from the trend, especially if the trend is strong. So what we can see here on the 5-minute time frame is a strong trend, and we can see the deviation from the trend in the form of that resistance wick, in the form of that support wick, I'm sorry. On the 20-second time frame, that wick will look like 2 candles probably, right? So to enter that deviation, put my stop loss below the previous candle, right below the previous candle close, and wouldn't really have a take profit until the resistance level or until the change of strength of the trend or lose of momentum there. Yeah, so again, imagine if this is a 20-second line chart and this is a strong upwards trend. We see here a small deviation from the trend. I would entry there. Of course, the entry wouldn't be perfect, so my stop loss would be below that thing, and then my take profit would be whenever I feel like I want to exit. So let's make a step to the side now and take a look at what it is in the moment, right? In the moment, I've been trading for 19 days, and I don't trade only based on this strategy. I trade based on like 500 strategies at the moment. Not exactly 500 strategies, but I take trades for 500 different reasons, and I don't limit myself in any way. But I will plan to, and at first I will start limiting myself since Monday to Tuesday probably. I will only trade during market hours, because I've noticed based on my profit and loss here, the green zone is basically market open from here, from the spike into the highest profits, and then this is where the volume dies off, and that is really bad. You know, you can, yeah, I know everybody can have their own conclusions based on this, but what I'm seeing here, I perform way better during high volume and high volatility than during lower volumes and lower volatility in general. So that's what I'm gonna try to limit myself to so far, right? Second thing, I need to improve on fundamentals a lot, right? My strategy is based on fundamentals and is based on my intuition. The more I can explain my intuition, the better I'm going to be in my strategy. So that we're going to focus on fundamental as well by reading books and watching videos and blah blah blah, right? Yeah, so the plan is to start applying some limitations. The first limitation I'm going to apply to is the market hours. If my trading will go good in the market hours and I will notice, oh, the trades that are actually based around my strategy are doing way better than the other ones, I will limit myself to only doing the strategy. If not, then we will see what will happen, right? I'm still in the experimentation phase and I'll be in here for, I don't know, probably until like day 60 or something. So yeah, now for finally, the numbers. Yeah, on day 19, I took 126 trades with a 50% win rate, but awful risk to reward ratio, which made me lose almost $900. Yeah, that is it. But one thing I have to say in my defense is again that this right here, you can see market open, and then this is where market volume and volatility starts to die down, and with that, my profits as well. Yeah, so thanks everybody for watching. I really appreciate every comment, like, and whatever else feedback you got. Check out my Discord server. There's a bunch of, recently there's been a couple of funny people, but we try to keep it clean. We try to keep it, smart, progressive community, so to say. Progressive in a way, like ICT haters and stuff. We don't, yeah, whatever. Go ahead, check it out, find out. You know what I'm saying? It's completely free. A lot of smart people there. Again, thanks everybody for watching. I'll see y'all on Monday, and subscribe to keep up with the updates. Yeah, bye bye.